Good weekend, traders. Haven't done a video for a while, so I'm just going to talk about some things that maybe some other people don't talk about. First of all, about the geopolitical risk and stuff. Some things that we might be setting up here. With this whole tariff thing going on with China, I can see over the weekend or the first of the week they're going to start uh, imposing their tariffs against U.S. goods, and that's going to drive another leg lower in the markets, in my opinion. Um, we saw some serious action happening in the global markets to start with. Um, we're going to start with EWJ. We closed the week breaking a significant trend area. Now, it's not confirmed yet on the Japanese market, but it really looks like it's going to be probably gapping down at or below the February lows Monday morning. So that's why I really thought it was a high odds probability that we see our markets gapping down Monday morning. Okay, that's one of the many reasons. Now on the DAX, you can see a similar situation here. We're inside the cloud on the DAX, so it's even weaker. Okay, uh, we have broken down below the prior swing highs way back here in 2015, and we closed near the lows of the session, and we're right at the February lows, and I see us breaking that first thing Monday morning. So this is not very good for the DAX. This is a very risky area to fall. I see sometime probably Monday, Tuesday, we're going to be down to the 11,552 area in the DAX. I'm pretty confident in that assessment. The FTSE is even looking worse here. We broke the 2015 highs, and we crossed this gone fan zone as of Friday and just came down with a vengeance. There is a lot of downside risk using this study for the FTSE. So I see our next stop is coming down here, retesting the 66.93 area. So we're probably even going to have stronger weakness in the FTSE come Monday morning than we do in the DAX. Some things to really watch here when fear really comes in here. The corporate bonds, the HYG, they start dumping the corporate bonds. And as of Friday, we did have a closing low below the low on February lows, and we are breaking a fib fan. So just keep that in mind. That I think we're probably going to have a breakdown in the high yield bonds starting Monday, a significant breakdown. Okay, sentiment is really bad going into Friday. So this is typically the area as traders that you want to start looking for buying opportunities. So what I did, I went through and searched all the stocks that had a 3 standard deviation move away from the Bollinger Band Friday, or on the daily Bollinger Bands. So what I came up with, I'm going to start with ADP, and we're breaking down at uh, we still haven't broken down from our February lows yet on ADP, but it's coming down with a vengeance here, and this is the second time we broke down from this area. I can strongly see a continuation pattern to the downside here on ADP, given this pattern, what you're seeing right here. Okay. Now, if you go on your weekly chart with ADP, what I'm seeing right here, we have a closing low below the secondary fib fan uh, zone here, and as you could see before, we've never had a closing low that low, so on this trend. So that further supports that I see more downside, and on the weekly you're looking at a target of 103.51 this week. So just keep this one in mind for more downside action. Okay, another one, Amgen, AMGEN. On the weekly here, we closed right at February lows. So it's a very high odds probability that this breaks down this week, with a probability of the 162.10 area. This is a high risk area. I have every belief to think that there's always a likelihood that we're going to go down to the 150 area, definitely. Bank of America. We saw the financials really take a nosedive because of the after the Fed did all their clarity in their speech and everything. And what we've done here, we've come down and we are testing a critical trend line support here. If we see continued weakness in Bank of America, we are going to be entering into a fib zone area of great risk to the downside. So just keep that in mind. My target this week is the 127 or the 2730 area. We did see some call activity Friday afternoon when everything was going nuts. They were trying to buy the Bank of America calls, and we are still holding up the was it the February lows. We are at the February lows, so it's not a breakdown pattern yet. Okay, so this could be a buying opportunity. Just keep that in mind. But I do see significant downside risk. We'll see how bearish the markets get. Sentiment is horrible right now. We'll see what happens here on that. I'm sticking with these weekly charts here so you guys can get an idea. BIIB, Biogen, came down to this trend line area. This is actually a buy zone for Biogen. So just keep this in mind. We potentially have a buy zone for Biogen. If we do see continued weakness, you don't necessarily want to add to shorts here. You want to buy on the dips, in my opinion. Okay, Bristol Myers here. It looks like we've got a failed squeeze pattern, and like it tried to break out, and there's a when you typically see that pattern, they tend to overshoot to the downside. So just keep that one in mind, that we could see some weakness in Biogen or Bristol Myers. So there's better charts out there, but that's something to keep on your radar. I just don't see a whole lot of support in these financials at these prices, in my opinion. I do see JP Morgan coming down and first retesting the February lows, and then we'll see how bad the market's going to get after that. I do think the market's going to get worse than the February lows. Kimberly-Clark is coming into a support area here, and I want to show you guys what's happening with Kimberly-Clark on the monthly time frame. I think we all know as traders what type of pattern this is. This is a head and shoulders potential top, and we're coming right down to support as of probably Monday. So keep that in mind, that we are building out a head and shoulders for the Kimberly-Clark. 3M is another one I want to talk about. We're breaking down out of critical trend levels. So keep that in mind, that we haven't been at these levels. So this uptrend, it's invalidating the uptrend on this move. Potentially, we're starting the leg down for a head and shoulders top formation. So keep that in mind, that right here we're still holding this breakout level. But if 3M goes any lower on the weekly, we could see some significant downside action. Come on. And what I want to point out here, so we had to break down in February, and we had a wider Bollinger Band on that breakdown. Well, now we came into a squeeze. This is a pattern you want to look for continuation patterns with using the Bollinger Band thing. So that's why on many of these charts, on most of these charts, actually all have this same type of pattern, where they were expanded on the February breakdown, and now they squeeze together, and now we're resolving lower. So very strong patterns to the downside. Same kind of pattern here on Microsoft. We had a wider Bollinger Band areas in February. It squeezed, and now we're breaking down out. And we finally crossed below the Ichimoku cloud too. So this is quite a bearish pattern on Microsoft. The first target would be 84 area for Microsoft. And we had a 3 standard deviation move on Friday. So really ugly looking for Microsoft. Also on the daily here, same scenario. We had a squeeze. We had a wide in February, had a squeeze. Now we're resolving lower. We're going to most definitely retest the February lows, if not lower. So just keep that in mind. Skechers is showing up too. It's got a slightly tighter Bollinger Band squeeze, and we're resolving lower and crossing below the cloud. It's not quite as clear. If you go into longer time frames, though, you can see just how far Skechers has gone. They had a good earnings report and everything, and we're coming off of a resistance area. So, and we're at a support line. So any continuation of Skechers could see a significant move lower, all the way down to the 33.30 area if this market starts to get a little iffy. And the last one on my short list of things that I've been looking at, you had the widening Bollinger Band back in February, and it come crashing down, okay, on your Texas Instrument. Then we got the squeeze, and this is, like I said, a textbook setup for continuation lower. And we're almost already to the February lows. So keep that in mind that there can be considerable downside pressure on Texas Instrument. And it did sell off on its earnings, and those patterns really get hit a lot harder than other patterns. So just keep that in mind. The prior area, so we're looking here for those prior earnings. The 94.80 area for the target potential before the next earnings report, probably, depending on how bearish the markets get. So that's just some of my ideas here. Now, all these stocks that I'm mentioning right here, this is not something that you probably want to enter in on the end of the day. You probably want to buy them in the morning hours, and if you get a buffer, swing them for overnight. Since they've moved so much already, you know, there's always a chance that we get a responsive bull market and you can get wiped out real quickly. These are just the type of patterns that I want to look for. Definitely, when you're out there looking, you want to look for Bollinger Bands that were expanded back in February and they tightened up going into this correction. Now they're resolving lower, because those are the ones that are going to be the most bearish at this, if and when this market continues to sell off. So just some ideas I'm showing you, mentioning to you. And I do want to point out, finally point out here, none of the FANG stocks are actually showing up in this list for strong sell-off. And of my indicators, the NASDAQ is still the one with the most bullish upside potential if this market does get a responsive bounce. So just keep that in mind. Sentiment is horrible right now, and this is typically when you want to shop for stocks. So if you were going to shop for stocks, you still have to look more closely to the FANG stocks than you do a lot of the other sectors, because the FANG stocks are actually not the ones selling off the hardest. Okay? Just some of the things I wanted to mention here. So be careful trading, and get back with me if you have any comments and stuff. Thanks.